Welcome back to the channel, everyone. Today we are going to dive deep into one of the most important reports for global property markets, the UBS Global Real Estate Bubble Index of 2025. This report comes out once a year and analyzes the housing markets of major cities around the world, checking whether they are fairly valued, overpriced, or at a risk of a bubble. Now, this year, Dubai has made headlines because UBS has placed it in the elevated bubble risk category with a score of 1.09. That naturally raises some big questions. Is Dubai's real estate market heading into dangerous bubble territory? Could we be looking at a sudden correction, just like we have seen in other cities around the world? Or is this simply a misunderstanding of how Dubai's property market actually functions? In this video, I am going to break down exactly what the UBS index measures, how Dubai compares with other global cities, and most importantly, why I believe Dubai is not facing a dangerous bubble. Instead, I will show you why the fundamentals here are very different. Now first, understand what is the UBS Bubble Index. Let's start with the basics. The UBS Global Real Estate Bubble Index is essentially a tool that measures the risk of housing markets becoming detached from reality. It doesn't say whether a crash will happen tomorrow, but it gives us a framework to see if prices are sustainable compared to factors like income, rent, and economic growth. The index categorizes cities into 4 risk zones. If a city scores below 0.5, it's considered low risk. Between 0.5 to 1.0, that's moderate risk. Between 1 and 1.5, it's classified as elevated risk. And anything above 1.05 considered high bubble risk. In 2025, UBS ranked Miami at the top with a score of 1.73. Followed by Tokyo at 1.59 and Zurich at 1.55. All of them in the high risk category. Dubai, on the other hand, scored 1.09. That means it has entered the elevated risk zone, but it is still far away from the extreme risk levels of cities like Miami or Tokyo. So already we see something interesting. Dubai is being flagged, but it's not at the top of the danger list. It's somewhere in the middle, not low risk, but not the highest either. Now, what does actually a bubble mean? The term bubble is often misunderstood. People hear it and immediately imagine a sudden crash, like what happened in the US during 2008. But a bubble doesn't necessarily mean prices will collapse overnight. What UBS means is that there is a risk of mispricing. In other words, property prices may be growing faster than the underlying fundamentals, such as local wages or rental incomes. There are a few classic warning signs that UBS looks at. One is the price to income ratio. How many years of average salary it takes for a skilled worker to buy a 60 square meter apartment near the city center. Another is the price to rent ratio. How many years of rent you would need to collect to pay off the price of that apartment. On top of this, they also track things like mortgage lending, construction activity, and how prices in a city compare to national averages. When these numbers get too far out of balance, that's when the risk of bubble increases. But again, the index does not say when or how a correction might happen. It simply highlights where the risks are higher. Now let's compare the global. To really understand Dubai's position, we need to compare it with other global cities in the index. Take Miami for example. Over the past 15 years, Miami has seen some of the strongest inflation, adjusted housing appreciation in the world. Prices there have grown far beyond what local incomes and rents can support. The price to rent ratio has even surpassed levels last seen during the 2006 property bubble, which is why UBS has placed Miami in the highest risk category. Then look at Tokyo. Prices there are about 35% higher than just 5 years ago. While rents and incomes have barely moved, despite Japan's aging population, foreign demand and favorable financing conditions have pushed Tokyo into bubble territory. Zurich is another case. Prices there are now 60% higher than a decade ago, and the city has the highest price to rent ratio among all markets studied. Again, rents and incomes have not kept up. Now compare that to cities with lower risk scores like London or New York. London actually saw its property values fall almost 20% from the 2016 peak, and affordability remains poor. New York, on the other hand, has stabilized after years of correction, putting it in the low risk category. So the index clearly shows us a spectrum, from very overheated markets like Miami and Tokyo to more balanced ones like New York, Paris or Sao Paulo, and Dubai sitting at 1.09 is in that elevated but not extreme category. Let's zoom in on Dubai. Over the last 12 months, Dubai's inflation adjusted home prices have risen by around 11%, reaching the same peak levels last seen in 2014. That's a significant jump, and it's one reason why UBS flagged Dubai. Population growth has been a major driver. Since 2020, Dubai's population has expanded by almost 15%, putting massive pressure on supply. This has pushed both rents and prices higher. In fact, over the past 5 years, rental growth has actually outpaced price growth, which is unusual and shows that demand for housing is not just speculative but also end user driven. And when we look at transaction data, the scale of this demand becomes even clearer. In 2020, Dubai recorded about 35,400 real estate transactions, which is worth 72.5 billion. Out of these, around 14,356 were off-plan, while 21,044 were ready properties. That was during COVID, yet the market was already resilient. By 2021, sales activity jumped to over 50,900 transactions, showing a strong recovery with investor confidence returning. In 2022 and 2023, the momentum turned historic. Off-plan dominated the market, accounting for more than 54% of all deals in 2023. Just to give you perspective, that year alone saw over 57,000 new off-plan registrations, with another 7,000 plus resales of off-plan units, meaning investors were actively trading future inventory. Fast forward to 2024, Dubai crossed another milestone, with total sales volume surpassing 140,000 transactions worth more than 460 billion. And in just the first half of 2025, Dubai already logged 94,000 transactions, which is residential, worth nearly 263 billion. Of these, 58.9% were off-plan, around 50,000 off-plan apartments and 10,800 off-plan villas. The remaining 41.1% were ready properties, about 23,400 ready apartments and 9,500 ready villas. If this pace continues, Dubai could easily cross $500 billion in sales value in 2025. At the same time, Dubai still offers some of the highest rental yields in the world. On average, investor here can expect net yields of 5 to 7% compared to barely 2% in cities like Zurich, Hong Kong or Paris. That means properties in Dubai are still generating real income, not just paper value increases. And let's not forget, even with recent growth, Dubai's property prices are still lower compared to global hubs. A luxury apartment in downtown Dubai or Palm Jumeirah often cost far less per square foot than a similar property in London, New York, or Singapore. Now, why Dubai looks risky on paper? Of course, it's not all rosy. There are reasons why UBS has flagged Dubai as elevated risk. First, affordability is an issue. Salaries here have not risen as fast as home prices, which means average residents are finding it harder to buy. Second, Dubai's market has always been more volatile than cities like London or Paris because it's more exposed to factors like oil prices, tourism cycles, and global investment flows. Another risk is oversupply. Building permits suggests that new construction could soon reach levels last seen in 2016 and 2017, and we all remember that period led to a major downturn in the market. On top of that, competition is heating up. Abu Dhabi and Riyadh are opening new zones for foreign buyers starting in 2026, which could attract some of the international capital that would otherwise flow into Dubai. So yes, UBS is right to highlight these risks. They are real, but do they mean Dubai is a bubble about to burst? I don't think so. Why Dubai is not a classic bubble? Here's why. Dubai is fundamentally completely different. Number one, rental yields remain strong. Unlike bubble markets where investors rely only on price appreciation, Dubai investors earn real cash returns from rentals. That makes the market far more resilient. Number two, demand is global. Dubai is not dependent on just local buyers. Investors are coming from India, Europe, Russia, China, and the United States. This international diversification protects the market from local downturns. Number three, government policies play a huge role. The UAE has introduced the 10-year golden visa, retirement visa, and business-friendly residency rules. These aren't short-term incentives. They create long-term end-user demand by giving people a reason to settle and invest in Dubai. The number four reason is population growth is explosive. Dubai continues to attract talent, entrepreneurs, and businesses. More people moving here means more real housing demand, not just speculative flipping. And finally, supply absorption is still strong. Yes, developers are launching many new projects, but the reality is that most of them are selling out quickly, sometimes within days. That's not a sign of a bubble collapsing. It's a sign of high, sustained demand. Now let's do the conclusion and the final breakdown. So to break it all down, the UBS report is correct in saying that Dubai is heating up and risks have increased. Prices are high, affordability is stressed, and the market is volatile. But at the same time, Dubai's fundamentals, high rental yield, strong global demand, rapid population growth, and supportive government policies make it very different from the classic bubbles we have seen in places like Miami in 2008 or Hong Kong a few years ago. That's why I don't believe Dubai is a dangerous bubble. Instead, it's a maturity global market. Will we see correction in certain segments? Absolutely. But a full-blown crash, that's highly unlikely. Dubai is here to stay as one of the world's most dynamic real estate hubs. And if you are looking at the long term, this city still offers opportunities that very few markets in the world can match. Now signing off, and if you have any questions regarding other projects in the market, you can go to the description box and click on WhatsApp link, comments and subscribe below. Thank you.